IRS is answering your questions in regards to the ERC credit. So make sure you stay tuned and welcome back, everyone. So happy to have you back for another update. The Employee Retention Credit, sometimes called the Employee Retention Tax Credit or ERCT credit, is a refundable tax credit for businesses and tax-exempt organizations. The requirements are different depending on the time period for which you claim the credit. Number one on the Q&A, the IRS states here, is every business eligible for the employee retention credit? And the answer is no. Who is eligible to claim the employee retention credit? Some promoters tell taxpayers that every employer qualifies for this ERC credit, but the IRS is stating that is simply not true. Eligibility for the ERC depends on your specific facts and circumstances. There are very specific eligibility requirements for claiming the ERC credit. Eligible employers can claim the ERC on an original or amended employment tax return for qualified wages paid between March 13, 2020 and December 31st, 2021. However, to be eligible, employers must have sustained a full or partial suspension of operations due to an order from an appropriate governmental authority limiting commerce, travel, or group meetings because of COVID-19 during 2020 or the first 3 quarters of 2021, or must have experienced a significant decline in gross receipts during 2020 or a decline in gross receipts during the first 3 quarters of 2021, or qualified as a recovery startup business for the 3rd or 4th quarters of 2021. Who is not eligible to claim the ERC credit? You don't qualify for the ERC if you didn't operate a business or tax-exempt organization with employees. Some examples of taxpayers who are not eligible to claim the ERC and are often targeted by scammers are individual taxpayers who are not business owners, employees, retirees, people who do not have employees, or household employers. Employers that didn't pay wages to employees during the qualifying time periods. Employers who experienced supply chain disruptions but did not experience a full or partial suspension of operations by a qualifying order or government agencies. Now, qualifying orders. To qualify for the ERC, you need to have been subject to a qualifying government order related to COVID-19 that caused a full or partial suspension of your trade or business operations. The government order may be at the local, state, or federal level. Examples of government orders. An order from the city's mayor stating that all non-essential businesses must close for a specified time period. A state's emergency proclamation that residents must shelter in a place for a specified period except for essential workers. An order from a local official imposing a curfew on residents that impacts the operating hours of your trade or business for a specified time period. An order from a local health department mandating a workplace closure for cleaning and disinfecting. Now, can you rely on recommendations or bulletins or statements issued by a government authority to qualify for the ERC? The IRS states no. To qualify for the ERC, you must have been subject to a government order that fully or partially suspended your trade or business. Recommendations or statements encouraging you to take certain actions are not orders. If you use a third party to calculate or claim your ERC, you should ask them to give you a copy of the government orders, not a generic narrative about an order. And read the order carefully to make sure it applied to your business or organization. Is being subject to a government order enough to make you eligible for the ERC? The IRS states no. You need to demonstrate that the government order was related to COVID-19 and that it resulted in your trade or business being fully or partially suspended. What does it mean to be fully or partially suspended? Whether your business or organization was fully or partially suspended depends on your specific situation. It states that some examples of who does not qualify under this eligibility factor are if all your employees were able to telework during the pandemic and your business continued to operate, your business wasn't suspended. If your customers were affected by a stay-at-home order, but no orders applied to your business operations, you weren't suspended. If you voluntarily close your business or reduce operations of your business, you weren't ordered to suspend. You could still qualify for the ERC based on a decline in gross receipts if you don't qualify under suspension of operations due to a government order. Now, was your business or your organization fully or partially suspended if you had a supply chain issue? A supply chain issue by itself does not qualify you for the ERC credit. The IRS has provided a narrow, limited exception if an employer was not fully or partially suspended, but their supplier was. However, it applied only when the employer absolutely could not operate without the supplier's product and the supplier was fully or partially suspended themselves. In addition to having the supplier's governmental order, you will need to show that the government order caused the supplier to suspend operations. You couldn't obtain the supplier's goods or materials elsewhere regardless of cost, and it caused a full or partial suspension of your business operations. You should be wary of anyone who says you qualify for the ERC based on supply chain issues without asking for specific information about how your business or organization was affected. Your supplier's situation and documentation must be legit in terms of what we just went over. Also, decline in gross receipts. You may qualify for ERC if your business or organization experienced a significant decline in gross receipts during 2020 or a decline in gross receipts during the first 3 quarters of 2021. Now, for 2020, you begin qualifying in the quarter when your gross receipts are less than 50% of the gross receipts of the same quarter in 2019. You no longer qualify in the quarter after the quarter in which your gross receipts are more than 80% of that same quarter in 2019. For example, your gross receipts were $100 in each quarter of 2019. They were $45 in the second quarter of 2020, $85 in the third quarter, and $75 in the fourth quarter. Under these facts, you would qualify for the second and third quarter. For 2021, the gross receipts for the quarter must be less than 80% of the gross receipts for the same quarter in 2019. For calendar quarters in 2021, you can also use the alternative quarter election rule, which gives employers the ability to look at the prior calendar quarter and compare them to the same calendar quarter in 2019 to determine whether there was a decline in your gross